What is up, everybody? I'm Scott Melker, and this is the Wolf of All Streets podcast. Today's guest is the CEO of both FTX Crypto Exchange and Alameda Research. Sam Bankman-Fried, better known as SBF, has become a legend in the crypto space, known for his talent in arbitrage trading, building fascinating tech, and creating top-of-the-line trading systems. Today, my plan is to find out how SBF built one of the top exchanges and grew a trading firm that moved up to $1.5 billion a day. I'm also interested in hearing an insider view on how whales and big money trade this nascent market and his thoughts on the future of our space. Sam, it's a pleasure to have you on the show. Thanks so much for waking up early for this.
Of course. Thanks for having me on.
So before we get into the questions, once again, you're listening to the Wolf of All Streets podcast, which airs twice a week. I talk to your favorite personalities in the world of Bitcoin, finance, trading, art, music, sports, and politics. The show is powered by Blockworks Group, a media company with over 20 podcasts in the network. And if you like the podcast and follow me on Twitter, check out my website, join my newsletter. You can do both those things at thewolfofallstreets.io. So, Sam, I have to ask you, do you ever get a headache or neck pain from that epic six-screen setup you have?
Yeah, definitely. I mean, it's not terrible, but like certainly some days it's like, neck doesn't feel exactly great, and I'm kind of like dreading if anything exciting is happening on like the left screen. I'm like, oh God, like I don't really want to do that. Hopefully I have a copy of that tab open on the right screen. That'd be better.
So obviously you have a lot going on when you're trading actively. What are you actually looking at on those six screens?
Yeah, I mean, it really depends, but I think that sort of, the general answer to your question is what are other people looking at? Like, what's the world looking at and what's the world doing? And I think that maybe something that's worth kind of giving on as a little bit of background is like, let's say that you're doing arbitrage, right? That's your goal, And so what that means is basically you're looking to buy a Bitcoin for $10 and you're looking to sell it for $11. You see it's whatever it's offered at or 10,000, whatever, $10,000 on Coinbase, bid at 11,000 on Bitstamp. You buy it on Coinbase, send it to Bitstamp, you sell it, you make $1,000, right? That's sort of like, really kind of the like clearest arb you can do basically in crypto. And then you can ask a question, which is why? Like, why is there an arbitrage? And like, I don't know, maybe the answer is like, I don't know, there just is, but maybe you can do better than that, And maybe you can get some intuition for like why and when there would be arbitrages. And in particular, what you sort of have to ask yourself is like, who's on the other side of that, right? Who's the person who's buying at $11,000 on Bitstamp, right? Like, let's say it's 10,000, who's sort of like doing the other side of this? And probably answers it's someone who really wants to buy Bitcoin, right? It's not someone who's like, I like doing anti-arbitrage, I like losing money. That's not what's going on. They're like, I think Bitcoin's going to be worth $20,000 in a month, and right now I can buy it for 11. So yeah, I'm going to buy it, right? And so what that means is that like arbitrage usually comes because of excess demand, because there's some place where there's too much demand relative to the supply. And maybe that's like Bitcoins on Bitstamp, just everyone's buying it. So many of them that there's just like basically no Bitcoins left on Bitstamp. People bought them all. And then like, I don't know, like who's going to be selling if they're like, no one can sell if there are no Bitcoins, and just left like some stale offer, like 10% rich. And that's the next best thing to buy. Right. And that's sort of like how it happens. And I think like more generally, what you sort of see is like whenever supply and demand have a big mismatch, whenever there's a lot more demand than supply somewhere, the thing just kind of blows out a little bit, right? Because there's usually like aren't enough sellers. And what that means is if you're an arbitrageur, that's where you want to be looking, right? Is to like go find where there's way too much demand, because that's probably a thing that there's like that's out of line. And then what you do is you provide liquidity to it by selling there. You go pick up some Bitcoins from Coinbase, carry them over to Bitstamp, drop them there, and sell. And that does, an arbitrage. It also provides liquidity to those buyers, right? Like you're getting more Bitcoins over there for people to buy. And in turn, that sort of starts to close down this spread, right? Like you're kind of relieving this pressure, or at least counterbalancing it. And so kind of doing an arbitrage is the same act as providing liquidity, which is the same act as getting rid of arbitrages, as making it so there are none left, And so then the question is like, what do you want to be looking at if you're doing arbitrage? The answer is, in my story, it's Bitstamp. You want to be staring at Bitstamp Bitcoins because that's what everyone's buying. And sort of more generally, it's whatever the crypto world is trading, whatever they're looking at, whatever they're really excited about, that's going to be where all the demand is. And so that's going to be where all the good trading is going to be. And so, like in July, there's a lot of Uniswap. There's a lot of like, having up on-chain metrics, Uniswap, MetaMask, things like that. Crypto goes through periods where it's all futures. Like, what's everyone doing? They're all trading Bitcoin futures, right? And like then what you have up like a lot of Bitcoin futures books, and you're looking at premiums and liquidations and things like that, right? And so to some extent, it's really reflective of what is going on in crypto and what people are doing. In general, sort of beyond that, beyond just whatever, sort of looking at what the world's looking at. When sort of people at Alameda are trading, often they'll have up, a lot of tooling. So I'll have like scrolling list of all trades that we're doing, list of balances and positions, capital management tooling, Slack, alerts, various monitors of our positions and things. And basically just a lot of things that seem silly if you're just trading on one exchange, because exchange just show it all to you right there on the homepage. But if you're trading on 30, it's sort of like it was overwhelming, and you need to build things to summarize what's going on.
When you're doing arbitrage, I mean, I did it all the time, just even as a retail trader in 2017. Yep. I was primarily doing Litecoin, just between Bittrex, Binance, and Coinbase.
Oh, yeah, Litecoin on Coinbase was insane in 2017.
It was amazing. And, obviously the opportunities would strike, but if you didn't have both Bitcoin and Litecoin on all three exchanges, by the time you could send the Bitcoin, it was the spread was gone. That 5% premium or whatever was dead. So as doing arbitrage, do you find that you need to have both either a Tether or dollars and Bitcoin on every exchange? Because as you said, that opportunity is only there for a second. And if you need to actually send them around, usually the opportunity is gone by the time it happens, right?
That's absolutely right. And it's a big difference between crypto and the rest of finance. And in the rest of finance, right, if you're an HFT firm and you see Apple's priced differently on NYSE and NASDAQ, right, you just buy on NYSE and sell NASDAQ and you're done. That's just the same thing. It's not like, did you have the Apple on NYSE? It's not even a meaningful statement, right. There's they're all through clearing firms that clear it to the same thing anyway. But in crypto, a Bitcoin on Bitstamp and a Bitcoin on Binance and Bitcoin on Coinbase are not the same thing. And you try and move them around to make them the same thing by paying some money and waiting some time and hoping that that you have withdrawal limits for it and shit like that. But no, if someone's trying to buy a Bitstamp Bitcoin, you can't sell them a Coinbase Bitcoin. You got to get it over there first. And so, as you said, it's often a lot of this is capital management. It's oh fuck, here's 70 wallets you have to be managing, and you have to have a little bit of Litecoin in all of them, or you're not going to have it where you need it.
Right. I also found that I tried to get cute and trade on foreign exchanges, and then I could never get my money out or get money basically anywhere. I even tried was it Zimbabwe at the time that had the insane premium, but obviously that didn't work out.
Oh, yeah.
But yeah. So, I mean, I think you kind of touched on it, that the concept is extremely simple, but actually making it happen, especially with size, I would imagine is extremely complicated.
Yeah, absolutely. And just everything breaks when you try it for size. And I think this is an underrated fact that you some holy shit, yeah, I did it. Obviously, if I had $1 billion, I'd make $1 trillion a day of profit. Why isn't Bill Gates worth more money than the world has? And okay, partially the answer is there's just not that much volume in crypto to support, a quadrillion or whatever. But also partially the answer is so many things break when you try and size up, right? You try and go from, $1 to a Bitcoin to 100 Bitcoins, you start hitting withdrawal limits on exchanges, banks start getting unhappy with your wire transfers to crypto exchanges, exchanges start taking forever to process your withdrawals enough in the hot wallets, you start having real impact on the specific exchanges you're doing, you start hitting foreign FX transfer limits from some countries, and just thing after thing after thing, you realize to scale it, oh boy, there's a lot of operational work you're going to need to do.
Yeah, it sounds kind of like a nightmare, which kind of touches on the next point I think is really interesting and something that we don't often get much insight on. As I said, Alameda, I mean, you're trading sometimes $1.5 billion a day, right?
Yep.
this market's not very big, right? So
Yeah.
if you heard BlackRock or something say that, you wouldn't be surprised, but it's a bit of a eye popper when you talk about it in crypto. So how can you do that without absolutely destroying the market?
It's a really good question. And the answer is that you can't just do one thing. You can't just be like, today I'm buying Litecoin on Bitstamp, because I can't even do it, let alone do it in a way that's an arbitrage. So really the answer is like, and part of this is like cycling back and forth and back and forth and back and forth. But part of it is like finding all the places that there's sort of too much demand and not enough supply, and starting to supply as many of them as possible. And you just can't do it all at once. You can't do it all in one place. And in order to scale this up at some point, you have to be doing 12 trades at once, because there's just, that's like a few percent of all volume. You're going to have really serious impact if you're 20% of volume. You can't only be doing like a few percent of all trades or something like that.
So is Alameda strictly when you're trading? I know you guys are obviously doing liquidity providing and market making and then arbitrage, but are you guys ever just sitting around and, taking straight up, buy low, sell high, looking at a chart, sourcing
Right.
where there might be engineering liquidity and really just playing the kind of swing moves?
There is some things like this, but I think the thing that really we think about when we're thinking about actual positions and deltas is, what's our edge here? Like, why do we think that this is a trade that we would make money doing? And not just that there's money to be made doing it, but that's sort of a trade that fits us. That like, if it's sort of like, yeah, maybe there's money to be made doing it, anyone can do it, this is like what everyone's looking at. It also sort of just feels like, it's like, this doesn't seem like our competitive advantage. Odds are pretty unlikely that there's a great trade here. Maybe it's marginal, unless it seems like, okay, yeah, obviously, like someone's buying $1 billion of ETH Classic today. Yeah, everyone should be doing the same trade. Like, yeah, of course. But you sort of like put that aside, and it's just, what's our strength and why do we think this is a good trade? And there come times, and I think kind of the clearest example of this is when there's something we have a fundamental view on, and there are some tokens that you could imagine doing this for. I think the easiest is like an exchange token, right? Like if you had some exchange token and there's like a buy and burn for like 80% of the token's fully diluted market cap every year, and you think it's not a flash in the pan, like this is sustained volume, it's sort of like I don't know, fuck market sentiment. It just doesn't matter anymore. Like you just buy this token. Like
it's just good economics.
Literally everyone sells their tokens. Like it's still good, right? That's obviously an extreme example. But there are times when we feel like we actually have an edge in analyzing like a token. And then sometimes we will, but it's not sort of the core wheelhouse. And those times are not the norm, it's the exception.
That makes sense. So I know that you have a long background and you've told that story before, so probably not worth going through the entire thing, but you did, coming out of MIT, I know you were a physicist of sorts and then decided to go into finance. You're right. And I believe you were at Jane Street. So what was the experience like trading legacy markets there? Where you didn't have a lot of these inefficiencies maybe, and it was just sort of a different market. And what did you, I guess, learn there, and how is it different, and how have you been able to apply that to crypto?
Yeah, so there's sort of senses in which sometimes it's very different, but in the end, you're always looking for the same type of thing. In the end, you're always looking for the inefficiencies. And sometimes there are different types of inefficiencies, right? But you're still looking for them. And so like, maybe it's not the things that it is in crypto, right? But that doesn't mean it's not anything. And so maybe, so I've never really worked at an HFT firm, but for people who do, right, the sort of inefficiencies that they think about often are, things like, oh, okay, like this exchange has a higher maker rebate than this other exchange by like a fraction of a basis point. And like there's not enough size provided on the offer. So it's just like generally good to provide on the offer here. That the inefficiency I'm exploiting is like understanding the, the microstructure of the exchange latencies and fees and things like that. And maybe it's understanding, look, all the order flow is coming on Amex right now. That's where everyone's buying. And there's you have priority if you're providing on the same exchange that the buyer's buying on. Although in equities, you don't need to. If you provide on NYSE and someone buys on NASDAQ, they can't buy through your offer. But they can lift up to your offer on their exchange first. You're like, okay, all the order flows on Amex, so it's a good trade to provide on Amex because that's how we get the order flow. And whatever, you sort of like, it's a different type of inefficiency, but it's still like a similar type of thing in the end that you're looking for. And I was trading international ETFs on Wall Street before this, and frankly, they're one of the messier things on Wall Street. And so they're not as messy as crypto, but they're like one of the more crypto-like things. And why is that? It's because what is an international ETF? So it's a fund. It's a wrapper that owns a lot of different stocks. There's, for instance, EWY, which owns whatever 50 different Korean companies, little bits of each. And it's a U.S. listed ETF that holds non-U.S. companies. And the key thing here is that as long as you stay on U.S. equity exchanges, there are a lot of things that just hold. You sort of like, it's like regularized in various ways. As soon as you say like the whole world, anything can happen if you're like vague enough about it, And you're like, all right, shit, like now I gotta go buy a bunch of Nigerian stocks. And like all these thoughts you had about like efficient markets and like Wall Street and all the infrastructure works well, that was not tuned to a frontier markets ETF. That was tuned to America and like, maybe Germany, or Japan, right? So when you look at more global stock markets, you do get to see things that look a little bit crypto-like. And so I think that there actually were some similarities there. And there's actually some sort of surprising things that some stock markets do. Like crypto exchange fees are insane compared to US equity exchange fees in some sense, right? Like crypto exchange fees are like 5 basis points, right? And then like US equity exchange fees are like, like a third of a basis point or something like that. Do you know what like Korean or like Hong Kong exchange fees are?
I don't.
It's like 20 basis points.
Really?
So it turns out there's just actually a lot of countries in the world where their actual stock markets, like the real official ones, actually just charge extremely high fees. And it really fucking distorts the market. I mean, it sort of like does what you'd expect, right? Like you'll just get these gigantic like markets with like no volume trading because it's like you have to pay huge fees to cross the spread, and spot gets super liquid, and instruments that don't have those fees get super liquid compared to them. So in Korea, options don't have that same fee structure. This is one of the reasons Korean options trade so much, is that you can like synthetically trade the stocks without paying their stamp tax or whatever. And so when you expand globally, it actually does look more like crypto than when you kind of stay within FANG stocks on U.S. exchanges.
Right, of course. High frequency trading always, it's well above my pay grade, but always perplexed me because you would see or hear rumor of these firms spending millions and millions of dollars just for like a 1 second or a fraction of a second edge.
Absolutely. And if you think about it, it's absolutely the right thing to do. And here's sort of the toy model is like someone has an offer out to sell Apple at $200, right? And markets are going up and up and up. And like every other stock's up, like everyone knows stocks are up. And like, Apple's like $199.99 at 200 is like the bid and the offer. And at some point, markets tick up another basis point. And every HFT firm in the world is like, okay, now that offer in Apple is cheap. Now you want to buy it because like the whole world's just worth like 2 bips more than it was a second ago. Like Apple's now worth more than 200, and there's just a fucking race. And it's like the first person to send the order, take it, gets the order. And the second person gets fucking nothing. And so you often, this isn't true of all the trades that they do buy, but some subset of trades do basically come down to winner takes all in speed. And if you can get, it's not about having speed on human timescales or even on news timescales. It's just having speed that's faster than the guy next to you. And if that's a microsecond faster than them, if the exchange actually can detect microsecond differences as the matching engine is that sophisticated, then the guy who's a mic faster might win every time, and get like, 20% of the volume just for that.
I mean, I guess if two people are trying to outrun a lion, you don't need to outrun the lion. You
Yeah,
just need to outrun the other guy.
That's exactly right.
Yeah, it makes total sense. So you started an exchange.
Yep.
Was that because you saw that there was an obvious picks and shovels sort of opportunity here, that the fees were much higher than in other markets, and that this was an easy way to capitalize on what you were already doing?
Yeah, it basically we had a lot of know-how, we had a lot of context. Exchanges are huge businesses in crypto, way, way bigger than in traditional finance. They're sort of like conglomerates that do lots of things. Combination of matching engine, risk engine, prime broker, product designer, listing engine, like it's sort of everything rolled into one. Derivatives in particular are like more than half the volume in crypto and in the rest of the world. So it's a huge space. There are actually not very many of them when we first started building FTX in like right around the turn of 2019, there's like 3. And it's sort of it, collectively making up half the volume in the world in crypto. And so there's a big opportunity, not that many players in it. We knew the space well, we knew the product well. And I don't know if you like remember crypto derivatives exchanges in like late 2018, it's not a pretty sight.
No,
like they had serious fucking issues.
Yeah,
hundreds of millions of dollars of clawbacks. It was like, yeah,
they still overload to this day.
But they still do. They're even worse then. And it's just like, at some point, we're basically just like, all right, this is fucking frustrating. Like these products are not up to snuff. And like we can do better than that. Like if that's the bar we need to meet, we can pass that bar.
We can stay online when people want to trade. Yeah.
Right. Exactly. It's like, what fraction of market moves are we offline for? Like less than 80%. Like, good job. And so it's sort of like, at some point we're just sort of like, all right, this is like, we actually think we can do better than this. And there's this big open question for like, will we ever get a single customer? Like, doesn't matter what product we build. If literally no one ever goes to our website, then it's useless. And like, I'd never done a customer facing thing before. So that's like a big unknown. And basically what happened, we just sort of sat there and did some math, not real math, like sort of firmer estimates of like, how much is this worth if it goes very well? And what are the odds that we can solve this? Can we ever get a customer problem? And like, when we're thinking about what are the odds of it, like, we're not trying to say is it 17.3% or 18.1%. Like, we're sort of like, all right, is it like 1% or 10% or 50%? Just very roughly. And we sort of thought about it and we're like, all right, 1% is too low. Definitely more than 1% chance we can figure out how to get customers. 70% too high. Definitely not confident we will. And I think like had a range of numbers between like 5 and 30%. That we would like figure out the things we didn't know how to do. And it's sort of like, all right, whatever, take 20-ish%, 15%, whatever, something like that, and multiply that by like how cool it would be if we got there. And just like, all right, that's a big number. And it's sort of like, how big is that number? And we're like, big enough that it doesn't matter if it's 8% instead of 12%. And like, it doesn't matter for a little bit off in one of the parameters. It doesn't change the answer. And the answer is we should go for this.
Only a trader would approach opening a business like that, or a professional poker player. You effectively just said that it was theoretically a higher chance of losing the bet, but that the pot odds justified pushing.
Exactly.
That's fascinating. I've never heard someone describe their thought process of starting a business like that. Like, we think that there's only like a 15-20% chance that we'll succeed, but if we do, it's going to be insane and it's totally worth it.
Yeah.
Yeah. It's amazing.
It was, obviously it worked and we're really excited about that. And I think it also really emboldened us to use that logic going forward and to sort of feel like, look, like, this sort of works. Like, yeah, you can sort of do this math and it tells you numbers like, are these all bullshit? Like, no, if you do it right, it might tell you you'll probably fail and you should do it anyway. And maybe it's just right about that, that when you see that, if you're careful about it, often the answer is just, yeah, you can go for it again and maybe we'll fail again, so be it. But that like there isn't sort of this mysterious force that means that anything that seems like it's not, that's unlikely to succeed is in fact definitely not going to succeed. Like that force doesn't exist. In fact, if it seems possible but unlikely, it's possible but unlikely. And possible is sometimes enough.
Clearly it was in your case.
Yeah.
And you've basically achieved it in about a year and a half, right? I mean, since you actually launched the exchange, and you built it very quickly.
Yeah, it was, I think that's definitely, I mean, obviously building things quickly is sort of our calling card in a lot of senses. And you know, always has been. And I think that like people sometimes ask us like, what's your secret? You know, what do you do? Is you show us this dev, but it's just actually 5 devs in a trench coat stacked on top of each other. And sort of the answer, like our weird, confusing answer is, I don't know, dude, there's no secret. There isn't like, oh yeah, like no one else is using Rust, but they haven't thought of that one. Like, no, it's just sort of like, why is everyone so slow? Like, why is everyone else not doing this? And I think the answer is like, you like dig into the organization. It's like, oh yeah, of course. It's sort of like, you know, Malthusian and dysfunctional and Malachian in the way that like big corporations, everyone describes them as. Like everyone who's ever been a big corporation has nothing but mediocre things to say about it. You know? And it's just sort of like, does it feel like you're operating at maximum efficiency when you're in a 2,000 person organization? The answer is no, it doesn't. Like obviously doesn't. And then like, what happens if that isn't the case? What happens if you like get rid of all the bullshit? Like, might it be a lot faster? And it says yes.
Is that just because it's you and you can make an efficient decision and like you're on top of the market? So obviously you see something that's bubbling on Uniswap, you're starting to see volume and you just literally walk down to your devs and say, I want this trading in 48 hours.
Yeah.
Because that's what it seems like. That's what it seems like from the outside.
I mean, sometimes it's not 48 hours, right? Sometimes it's like 20 minutes.
Yeah.
Right. Yeah. And like we have senses of how long things take. And sometimes we're like, shit, this coin just went up a lot. Should we list it right now? Like people are looking at it, you know, and it's a thing you can do. And so I think that is a piece of it, but I think there's another piece of it which isn't captured by that too, which is that like, you know, if you try that in a lot of places, the devs are like, yeah, whatever, fuck you. You know, that's sort of like the response you get. And they're like, whatever, I got things to do. I'll get around to it. You're like, no, it's urgent. They're like, well, my thing's urgent too. And you just sort of like, I don't know what you do. Do you tell them they have to do it? And then they're like pissed. So they like, you know, and like, I think what we sort of try very hard to do is to put ourselves in a situation where that's not going to happen, to put ourselves in a situation where we're all just naturally usually going to agree. And if we don't agree, we'll hear each other out and then say, yeah, okay, we understand all the arguments. I don't know who's right. Let's flip a coin. And it's actually pretty rare that we strongly disagree and can't resolve it. And make whatever sacrifices are necessary to be able to be in that position. And big sacrifices are necessary. And the biggest by far is sacrificing the ability to grow your headcount extremely quickly. Like, if you want to be in that position, you can't have hired 50 people in the last month that you don't know. There's like no chance that everyone's going to be on the same page if that's how your hiring works. And it's a lot easier if there's like 7 of you working on something and you've been working together for 2 years and trust each other, and you both have deep subject knowledge and learn how each other think and communicate, you know? And there are costs to that model. There are costs to growing headcount more slowly, but there are benefits too.
So the benefit obviously is that you're lean and fast. And I would say the downside is probably that you all sleep on the floor in the office for an hour, right?
That's, yeah, I mean, that's definitely a piece of this. And it's hard to hide. Like there's sort of, if a company's big enough, you can always hide. You know, as long as you're not egregious, you like don't obviously not be at work when you're definitely supposed to. And like maybe you're not going to be like employee of the year, but like it'll kind of be okay, you know? And you can't do that at like a, you know, here.
Sick of paying ridiculous fees to trade crypto? It's time you try Voyager. It's hands down my favorite place to buy and trade crypto, and it's 100% commission free. Voyager gives you easy access to more than 40 top crypto assets, and you can instantly transfer cash from your bank account so you never miss a trading opportunity. Even better, you can now automatically earn interest on your crypto holdings. Currently, they are offering 6.5% interest on Bitcoin and 9.5% on USDC. Yes, you heard that correctly, 9.5% interest. And there are no limits or lockups, so your funds always stay liquid. Find out why so many people are making the switch to Voyager. Visit investvoyager.com or search for Voyager in the iTunes or Google Play Store and get $25 in free Bitcoin when you use the promo code SCOTT25. That's SCOTT25. If you gamble with Bitcoin, you need a sportsbook that doesn't just slap the word crypto on their homepage and call it a day. That's why you need MyBookie. They're the only sportsbook capable of taking your Bitcoin obsession and turning it into huge cash prizes. Do you want a 100% bonus on your first 3 deposits? No deposit fees, huge deposit limits, and withdrawals processed within 24 hours? MyBookie's got you covered. But that's just the tip of the iceberg. Do you want to know what's really going to piss off all those people who told you to stop talking about Bitcoin 10 years ago? MyBookie's crypto rewards program. Receive cash back, free bets, huge bonuses, and exclusive promotions simply for using crypto. One deposit makes you a crypto rewards member for life. That means cash back, exclusive offers, and more forever. But we're still not done. MyBookie knows that your love of crypto is matched only by your hatred of credit card fees. So they decide to issue back those credit card fees in the form of crypto rewards. And they're doubling it. So if you incur $10 in credit card fees, MyBookie will offer you a crypto reward of $20. Deposit with Bitcoin, Bitcoin Cash, or Litecoin with ease, and withdraw with Bitcoin just as simply. Put your crypto where your mouth is and sign up at MyBookie. And when you do, use promo code SCOTT to receive a 100% bonus on your first 3 deposits. Bet with the best, bet with MyBookie. How do you balance both companies? I mean, obviously, if you're actively trading for Alameda and something comes up that needs to be handled quickly on FTX, how is that something that you can possibly manage?
So, I don't really trade much for Alameda anymore. That's, we have a bunch of traders, and I'm, spending basically all my time on the FTX side. But I think more generally, there are just a shit ton of things going on here. And there's, a ton of initiatives within FTX. There's building out Serum, and then there's just like a ton of investments, and there's a lot going on each day, and it's a lot. It can be it can be overwhelming, and it's sort of deal with it. I don't know. I like sort of my answer is get through as much as you possibly can, and there's a limit to how much you can get through, but it's a lot, and the more that you put in front of yourself, the more you can take on. And I think a lot of this is just about being ambitious about how much you can do, not like completely reckless, but it's sort of like if you try and hold yourself to the standard of figuring out how fast you can push things, you end up pushing things a lot faster than if you hold yourself to the standard of are you moving at least okay speed?
Yeah, that makes total sense. So you said when you were building FTX that it was sort of a necessity in the market that you saw, that other exchanges were just subpar. You said if we can be online 80% of the moves, and that's an improvement.
Yeah.
So, okay, that gets you to where we are today, right? But this is still a small market, right? I mean, relative to any other market. And so what does the future of, FTX specifically, but what are we lacking in crypto exchanges, crypto platforms, that we're going to need to really take it to an institutional grade level to accommodate for the huge money that's inevitably headed our way?
So it's a really good question. And I was sort of shocked when I thought through some pieces of this. There are ways in which crypto isn't as much smaller as you might think. And as an industry, its market cap is not that big, right? Its market cap is roughly the market cap of Microsoft or something, right? It's when you look at trading volumes, it's very large trading volume to market cap ratio. And liquidation to market cap ratio is off the charts in crypto. It's just there's sort of nothing comparable. There are ways in which crypto has been pushing itself very fast in terms of exchanges in particular and nothing else, basically. So that's sort of one answer. But what does it mean to scale up the industry? Like, what's necessary? There's just a lot of things, and technology is one, but it's not the big one. Like that's a solvable problem if you need to. The bigger things are like, well, why are you scaling up? Like, where's the pressure to scale up coming from? And I think often people are like, we want to scale crypto up to the whole financial ecosystem or something like that. And I do too, and I think that's where a lot of the upside is. But you have to have demand for that, I sort of feel like it should happen. That doesn't mean someone's currently offering to pay me a lot of money to make it happen. And It doesn't mean customers are actually going to use it right now just because you kind of think it should be there and that they should want it. And then you sort of have to figure out why. Like, why there's sort of this, like, I don't know, I kind of feel like anyone who's used like a sophisticated crypto exchange and then who has tried to trade on like E-Trade comes away feeling like, okay, like whatever, there's a lot of differences and a lot of ricketiness in crypto. There's just a lot of things it does better also. Like it's sort of like, oh God, it has like order books and lots of order types. And like you can get funds on and off in lots of different ways. And you have control over all of that. And like it's open 24/7. And it's just like all these things that it's just like, okay, obviously you want that. You get margin, you get like cross margin, whatever. It's sort of like actually a lot of ways in which it's like pushing forward. And like a lot of fintech tech is sort of like, I don't know, you compare like the FTX app to Robinhood in terms of like what you can do with it. And it's just like, so then the question is like, all right, like why is like what's going on here? And I think the answer is like, I don't know, the world's complicated, but also there's like, there's a lot of things that have to lock into place. You have to figure out what the role is you're playing, how that fits into regulatory infrastructures. Are you trying to appeal to like retail? Like, is this like integrating with businesses or like retail traders or Wall Street or pension funds or what? And so if they each have their own requirements and they each have their own zeitgeist. And for each one, you have to sort of like needle at them, and get them to feel like, fuck, we really want to be able to do this,
Yeah.
And it's not that it's not doable, but it doesn't just automatically happen for no reason, And so I think like there's a ton of potential there. There's also a lot of things that need to fall into place for many of these like expansions of the crypto ecosystem to actually happen in a big way.
I mean, you've said openly that you want to have 1 billion people trading on FTX, right?
Yeah.
I mean, that's worlds apart from where we are.
It's so far away, but I also think you have to want that. Like, it's like,
of course,
what's the biggest upside? Of course, it's 1 billion people. Like, if it's not, you're sort of like definitely not, as sort of ambitious as it could be. And then I think you start to ask like, okay, what would we need to do to get there? And there's like some ways in which it's nothing, and some ways in which an enormous number of things. And I think like demand is just the biggest piece here, frankly. Throw everything else out. Like, you got to have you have a service and people want to use it.
Right. So you don't need to scale ahead of demand. You'll just take it as it comes, basically.
Yeah. And that's not to say you completely ignore the ability to scale. Like, that is important too. But like, one of them is just much more important. Like, the number of businesses that have died because they never had demand is like 99%. And the number of businesses that have died because they couldn't scale is like 30%. Those add up to more than one because many businesses, it's just overdetermined that they fail. Like they can't scale to their tiny customer base. But it's just like almost every story you hear of like a friend starting a business, it's just like they never had a single paying customer. Like, that's a real problem. I'm like, okay,
shit business.
They weren't ready to run a multinational, but also they couldn't get their friends' parents to buy their product first. So like, let's start there.
Yeah, I guess we can throw out the ones that were just patently bad ideas.
Right. Okay.
Interested. Yeah. So, I mean, talking about scaling and being, a solid exchange, just a product that people could use. I mean, we were all here March 12th, right? We saw the absolute liquidation cascade on BitMEX and what happened. How do we avoid events like that in the future? We're literally, we have like $15 million liquidations firing into an empty, order book.
Terrifying. And I mean, it's really terrifying and harrowing. And I think if you're not harrowed by what happened on on March 13th, I think you didn't see exactly how bad it almost got.
Yeah.
It got bad, but it honestly turned out kind of okay, right? Look, I'm not saying it's a good day.
Well, it went from 6,000 down and was back at 6,000 by the time I woke up, and I never even knew it happened. So
right. So it's like, okay, things were down a lot, around that time. I'm not trying to like dispute that, but crypto made it out, and like without that many scars, all things considered. At least not long-term ones. But if like Bitcoin hit what, 4K at the bottom, I think?
Yeah, like 38. Yeah.
Yeah. What if it hit 3K?
See, it would have gone to zero on some exchanges.
That's a problem, is that it wasn't that far from going to zero.
There's no bids.
There's no bids, and the momentum here is fucking terrifying. Because the problem is that as it goes down, you just liquidate more and more people, and it goes down more and more, and that triggers more and more liquidations. And what happened, sort of the core thing that happened that caused this whole fucking shit show, is that there's sort of this golden parameter that governs a lot of trading, not a lot, but a number of trading situations. And what it is basically whenever there's a momentum effect, it's like change in selling pressure for every percent that the asset goes down divided by number of bids per percent. And whenever that gets above 1, it means that you have an exponential effect either way. But instead of exponentially dying down, like instead of like instead of going up, sort of like uplift, exponentially tailing off and converging, it just exponentially grows. And same thing downside. There's this point. What's happening? This point at which going down 1% triggers enough liquidations to cause it to go down more than 1%, and then just like diverges. And yeah, we were just like kind of in that situation. Like we actually got there, and it's like what happens if it goes to zero? And the problem is like it's not like everyone can just ignore it because everyone's liquidated. Like there are things happening in real time, and like there are all these businesses that don't make sense if Bitcoin's trading at $100, right? Like I don't know, like what do you think that the like financial situation of a Bitcoin mining firm was when Bitcoin's at 2,500, when it was at 8,000 the previous day? Do you think they're solvent? Like, do you think that their business, do you think their assets have value when Bitcoin's worth 2,500? Like, given the electricity costs, like probably not. They're probably leveraged long. Like they may have just blown, like get to this point where like half the industry just blew out.
Right.
And like what you can
do. Those miners are probably getting liquidated as well on the beyond the mining part. Right.
So yeah, it's just this fucking terrifying position. And I mean, yeah, I think it came not that far from being a lot worse. And so then what can you do to like have that not happen? And okay, so like my first answer, I actually think there's like not a great answer to this question. I think there's a lot of shitty answers. There's no, I mean, it's okay. You can ban leverage. Leverage is a cause of a lot of this, right? Because a lot of what's going on is that if you get leveraged long, then you get liquidated. If no one ever gets liquidated, that cuts off a lot of the momentum effects. So you could try and ban leverage, but if you ban leverage, you're basically banning trading. I mean, it's like so inefficient if you can't use margin. You can limit leverage. You can limit position size on leverage. You can do things like this. Now, of course, you need to get every single venue in the ecosystem to do it, even though it's definitely not in their interest.
Right.
Right. So you can't really do that. And, you can try to get more bids, but like, what's that even mean? Like you're going to your dad and like, can you please bid for Bitcoin? He's going to be like, no.
And if everyone gets liquidated, they don't have the money to buy anyways.
Exactly. Right. And so it's like, what you do about this? And really, I think really one thing that you can do, and I think one thing that's really worth noting is like, why doesn't this happen in Apple? Now, part of the reason it doesn't happen in Apple is like liquidations aren't really a thing. Like instead you just sue people for their money, instead of like in the real world usually, and you don't have to sue them, you like ask them to top up and they do. But the other thing is that, let's say that Apple gets liquidated down to $5, right? What happens next is like Warren Buffett comes in and just buys all of Apple.
Right.
And he doesn't need to give a fuck about sell pressure or anything. He's like, look, Apple's going to pay out $50 billion in dividends this year. from their profits, and I just bought the company for $25. I don't care about anything else. That's a good trade. And so because equities are like kind of tied to this like future expected value of dividend stream thing, there's just like lower arbitrage bounds at the point where it just makes sense to ignore order flow and just buy it and get the dividends.
Right.
And there's upper arbitrage bounds too. They're a little tricky because you can't, like if you short sell and it just keeps going up, you get blown out. But there is one upper arbitrage bound for equities, which is the company itself issuing new stock and selling it. At some point, the company's like, okay, our company's not worth this much. We're just going to print new, stock and sell it, right? and right, exactly. That sort of like hits the upper arb bound. And so there's sort of like a little bit of things tethering equities within like a 50% range if they're like theoretical economic fair value. That means that these like complete liquidity crises have less impact than they do in like what is Bitcoin worth? It's sort of, I don't know, like it's not like you can redeem it for the for the dividends.
There's no Fed. I mean, if you're gonna make the comparison, is that there's no floor. Clearly, like we just talked about it, it could have gone to zero. The Fed is not letting the stock market go to zero.
Yeah, and you see that with bonds also, where like when
they almost
bonds look like they almost went to zero. But then what did the Fed do? The Fed announced they're going to buy like $1 trillion of bonds, and they all just recovered in 30 seconds. The Fed didn't buy any bonds; they never needed to.
They just had to tell people that they were going to.
Yeah, and that was enough. And people were like, all right, they're backstopped. Junk bond, AA rating, and so like, but that's not happening with Bitcoin right now, and that's sort of like the thing that it's missing, and I think that like the real answer to this long term is getting in a position where it has, the sort of use cases that make it, or the sort of buy-in from enough countries or places or something like that, that it just has value that you can't take away. And it doesn't matter what price it's trading at on Huobi. Like, what matters is it's a Bitcoin and it's worth something. And if you can buy it for a low price, you just fucking do it.
So it's somewhat a divergence between what you would call the price and the value, right?
Yeah.
I mean, is that regardless of what the price is? And I think that that's what we're seeing this time. I mean, maybe, obviously the most dangerous words in investing are this time it's different, but 2017 was basically what we're talking about. Right. I mean, it was a lot of speculative FOMO. This time we have hold FOMO, right? I mean, people are FOMOing into Bitcoin so that they can hold it and remove supply from the market because they actually see it as a hedge, or they actually see it as, a deflationary asset and important. So it really is a different situation this time. And it kind of is what you're talking about.
There's definitely a lot of difference. And like, I certainly feel a lot better about PayPal buying a chunk of Bitcoin for their business than I do about the fact that I just passed someone on the street who was asking their friend where you get the Bitcoin.
Shares
sort of like,
of Bitcoin.
Right. You're like, which one of these do I think is like sort of like a real long-term buy-in for the for the thing. That being said, there's some weird stuff going on. I mean, it's not nearly like 2017, and there's a lot more institutional buy-in. It's also a lot of whales. There's a lot of like, it's a lot more concentrated than it was in 2017. A lot less super retail-y. But I mean, people who are like real crypto believers, they're not short right now. They're not hedged. And they're not long. They're really fucking long. Right. Like it's been a long time since I've seen like crypto Twitter be this bullish on average. And it's it's sort of like, here's 100 people who are just moving the market along, And I mean, it's an interesting dynamic. And like, I think to some extent, part of me is like, yeah, I think they're right. Like, but part of me is also sort of like, I don't know, that's like, you can't just have like, what if the world disagrees with them? Like how strong are their hands really here? Right. How leveraged are they? And I think like, it has some elements of that as well, of this, but also has real elements of sort of sturdy institutional buy-in in a way that's clearly increasing rather than decreasing.
Michael Saylor isn't hurting our cause, right?
Oh yeah, I mean, boy, did that one come out of nowhere also.
Yeah, I mean, specifically today that they're going to issue like 400 million to buy more Bitcoin.
Yeah, it's a lot. I mean, how much does 400 million move Bitcoin out? It should probably be up, I don't know, what, like 5% or something? I don't know. Like, you have impact if you buy $400 million.
Yeah, I guess the question is, when do all those people decide it's time to sell? The whales you're
Right.
talking about, because there's a point,
Yeah.
regardless of your belief in an asset or whatever, where it's just logic. You logically take profit, right?
Look, if Bitcoin trades at $80,000 today, I'm going to fucking sell Bitcoins. I mean, I don't.
No.
It's just like I don't think it's going to be at that high of a price in 5 days. Like, at some point, even regardless of what you think it's going to be at in a year, you're sort of just like, all right, this is not an efficient market move going on right now. Like, there's like a complete lack of liquidity, and someone's got to be here selling.
Yeah, the market needs it. It's interesting. I've noticed that you guys have done some interesting moves with FTX as well, and like other exchanges. I'm very friendly with the guys at Hero.
Yep.
I had Dan Gunsberg was literally the pilot of this podcast that we
Nice.
submitted to Apple and Spotify. I met him at a wedding randomly.
Nice.
And I mean, I saw like this amazing integration that you guys did with them. I would love to hear more about it, but also just the kind of thinking of the strategy of working with other exchanges, to.
So I'm going to tell two tales, and like in one, it's just like fucking obvious that this should happen, and it should happen way more, right? And sort of like, all right, you have customers and you don't know what to do with them. We have a matching engine and like crypto technology suite. What do you think would happen if like we put those two together, And there's like, obviously that should happen. Should, like, no doubt, right? And I think that like there's just a lot of examples of this. And I think that like obviously they didn't have no monetization. They did have some, and they did have technology, but there's also technology that they didn't have and that we did. And so it was sort of like, whatever, there's this economic question, but if you're on the same page, you can find some way to find it out, you can find some way to find the efficient, like a fair price to do whatever the split or trade or whatever is at. And then if it's positive sum, it should happen. And like, it's like, yeah, their customers wanted some products. We had the technology for it. So we should all, and they had the customer experience and the product design. And I think, let's combine those. And so I think like, in some sense, just like supernatural. And it's just like, yeah, that seems like a positive sum trade. And in some sense, the question is like, why isn't that constantly happening?
Yeah,
why aren't there like
question.
1,000 places doing this with each exchange? And the answer is like, at once extremely compelling and very unsatisfying. And it's sort of like, here's what often happens when we've tried to do this like 10 times. And I think they're the only ones who are live right now. Maybe there's another one going live soon, but I think they're the only ones right now. Sort of impressive. Like it's like a 90% failure rate. And like, what the fuck? And it's always, they always die the same death. And that death is basically like, we're like, great, white label our platform. That sounds great. And like, cool. And then they come back to us and like, we need you to build some stuff for us. And we're like, you're going to build the GUI, right? And we have the back end. They're like, well, we need more from your back end. And already we just get this sinking sitting there. And the problem is that like the FTX front end, there's no back end. It just calls our API. Like the FTX front end is just a GUI on the FTX API. And so we're sort of like, so here's the thing, dude. The FTX GUI can find everything it needs in our API. And like that just like, okay, so we're already pretty skeptical of where this conversation is going, right? Because it's sort of like proof by example. And then, we're just sort of like, all right, like, let's talk about this. What do you want? And they're like, you don't have P&L. And we're sort of like, all right, so here's a few things. First of all, if you have everything else, you can reconstruct P&L. You can compute it on your side. But putting that aside, even, we do have P&L. Here's the endpoint. And they're like, yeah, but that's over us. We need over WebSocket. And we're sort of like, just to clarify this, WebSocket, the point of this is, so REST is when you basically send a message to the API and you're like, hey, could I please have this information? They give it back. Like, I want to know the last price of this. Or I want to send an order. WebSocket is a streaming data feed. And it's great if you want to like get all pricing updates for a market and it just streams. Anytime there's a trade, it'll tell you about the new updates. Or like, all right, so P&L, to be clear, this monthly P&L and you want it every 50 milliseconds. Is that right? Like your complaint is that you can only query your monthly P&L every second instead of every 50 milliseconds. And they're sort of like, we want it over WebSocket. And we're sort of like, I don't get why you would want that. This is not helpful. Just use the REST endpoint. It's fine. And they're like, we need you to work with us. And we're sort of like, look, we can make this endpoint, but like, I don't get why you want this. And I'm kind of worried this is not going to be the last time we are in this position. Like, what are you going to come back to us with tomorrow? And of course there isn't. And then you're sort of like, how did we get here? Like, there's a positive sum trade to do if you just used our REST endpoint for P&L. So like, why are we where we are? And like, what's going on? And I don't know, there's a lot of answers, and some of it's just communicating is hard. Some of it's externalities, like they don't give a shit if we have to work, and like we don't give a shit if they have to work. I don't really think that, but there's like a little bit of that. So we're trying to, but I think part of it also is sort of like, well, what are you selecting for? You're selecting for people who could do something great if only they had exchange infrastructure, but don't have exchange infrastructure. Like, there's some selection for people who can't do it. And then you're like, why couldn't they do it or hire someone to do it? And now you're like, oh, I see. Like, whatever was stopping that might stop this too. Like, are we sure this is solving their actual problem? Their problem might not have been that they didn't have a matching engine. Their problem might have been that their management had no idea what they need to do to build a system that can provide, like the problem may have come way earlier than that. And so then you're like, okay, so where does it make sense? And like, what you're left with is just like, the most natural white label thing is just like kind of narrow slice of like sharp, really reasonable, on the ball, and like savvy enough to kind of know what they need and don't need, but like not experts at building an exchange, because then they would just build it themselves. I think that's where you see a place like Hero come in, right? Like, they sort of had enough context on this process that they just like had real instincts on all of this, and they're like, yeah, obviously we don't need like fucking, WebSocket P&L. Like, we can just whatever query REST as much as we need, or like calculate our end or whatever, but didn't actually have like a matching engine. It seemed daunting to build a whole exchange product. And so you're actually kind of like selecting for like, not that wide of a slice of sort of companies that are going to be like good to work with on something like this, but also want a partner.
So somewhat like the Pareto principle, right? Is that 20% are going to waste 80% of your time, and exactly. and vice versa. So, but I mean, I just don't see the CEOs of a lot of it. I can't see like Arthur jumping in an opportunity like that. Maybe I'm wrong. But
that is another thing. It's just like, it's sort of like, you have to get like, both sides have to be flexible. It's messy. And you have to like find a way to make it work, and you have to be like not too protective, and you have to be like a little adventurous, and that's not how a lot of companies work.
Yeah. Speaking of Arthur, obviously, I mean, we've sort of seen what happened with BitMEX, right?
Yep.
I don't know if he's on the lam at this point, who's been arrested, but it's not a pretty picture over there. How much, I mean, I'm sure you're doing everything right, but how much like is the fear or dealing with regulation and the changing regulatory environment and the varying regulatory environment from country to country? How much, sleep do you lose at night, if you get any anyways? Do you worry about like remaining compliant and making sure that everything you do is, it seems like you would need more lawyers than employees.
It's a really good question. And I've sort of two responses to that. The first is that like, you definitely don't want more lawyers than employees. Like, if you have too many lawyers, that's terrible. And the reason is that like, it's not like you have a regulation question. So you go to a lawyer and then they give you the regulation answer, and then you solve your regulation problem. Like, you get 12 lawyers and you hear 12 answers. Yeah, and you're like, you guys just not agree. Right. It's sort of like they just don't agree with each other. And it's like, whatever, it'll be fine. Now it's like, you're definitely going to jail. And it's like, I don't even know what to do now. You guys just you guys are the experts, and you just contradicted each other. I don't even know how to proceed with this. That's not how experts are supposed to work. And it's sort of like, what's step 2 there? Like, step 2 can't be start implementing suggestions if they're contradictory. And so like, really, step 1 was the problem. And there's just, it's a pain, but you have to try really, really hard to find the right people, and find the people who will give you the right answers, and give you the answers which have like the right context, the right knowledge, the right instincts. the right calibration, people who are willing to express their uncertainty. Like, it's really like the thing that you hear a lawyer say the least, but that's like I find often a good sign. Is like, look, I see, like, I don't know what the answer here is for sure. It's like, honestly, it could go either way. My best guess is that this is the way that's going to go. And I think that it's going to, but I think there's some chance it goes the other way. And I think it's like actually a pretty non-trivial chance. And so I wouldn't do this thing because I think that's just too big of a risk given what I think the odds are. You know, a sentence like that is just like so not what you're used to hearing from a lawyer, right? And just like violates so many things that lawyers are supposed to do. First of all, you're not supposed to, you're not supposed to say you don't know the law. Even if the law is unclear, you know, you're kind of supposed to have an answer. Second of all, you're always supposed to be conservative. You're never supposed to like suggest that your client could do something when you don't know the answer for sure. Third of all, you know, you're like, it's sort of like, it's just like this very different way of thinking than like, make sure you don't have liability here as a lawyer to your client, you know? But it's what you need, because frankly, when the answer is it's unclear, you need to hear that. Like, you need to hear that it's unclear, because if you hear it's clear in either direction, you're going to fuck up. So that's the first thing, is just like being really honest and realistic with yourself. And like, and there's these other things which are just like people are loath to say, but they just really matter, which are like, you know, a lot of these things, like people try and think of it in terms of like, this is the line, like these are the things you can't, like they try and think of it in terms of like succinct definitions that classify things that are okay and not okay. And that's not how it really works. Like, everyone in the legal world understands that like the laws can't exactly explicitly cover everything that could possibly happen. And there's always some amount of trying to read between them and figure out what they kind of basically mean. And that, like, you know, there's like a big difference between like, look, I mean, this is kind of unclear, but like, yeah, that's basically what we're going for there. Like, this is, you know, maybe we'll get some feedback on it, but like, that's basically fine. And like, oh, come on, dude. Like, what the fuck? Like, I understand you're trying to claim you have this technicality. Like, this is obviously fucking bullshit. And this is egregious. Like, this is exactly the thing we want to stop. And it's like in exactly the way we want to stop it. And it's like way bigger than we're comfortable with. And like, you know, your sort of excuse is not worth a whole lot here. And this sort of sense of like, and you really get this sense also if you read some of the, you know, some of the things that the government files in these cases. You read through them and you see paragraphs like, oh, come on, dude, really? This is what you did? Come on, you know? And paragraphs like, you can't fucking do that. You know you can't do that. Everyone knows you can't do that. We told you couldn't do that, and you did it again.
Right.
Like,
so
do you think we're not going to file this? Like,
so it's a difference between like a brazen, you know, breaking a law that they know that exists, and at least looking like you're, you know, making your best faith effort to be compliant.
Exactly. It's like, yeah, we don't know exactly how to interpret some laws in some cases because they weren't written with this in mind. Like, you can take a guess, you know? And so I think that's like, that's one piece. And then another side of this is like the goal is not to lose, is to stay up late instead of losing sleep, so to speak. Like, the goal is not to be shocked, to have done your homework and done whatever you need to do to get yourself in a position where you know where you are, you know, and where you're comfortable with where you are. And that might need to change. Regulations change, and then you need to change, and that happens. But like, you know, it's sort of like, you shouldn't be surprised by things. You shouldn't be shocked by things, you know? Like, you shouldn't be like, where the fuck did that come from? And if you are, then you should either got very unlucky, or you should ask yourself whether you were really thinking about this right, you know? And you should like feel like you're in a pretty decent position. Like, look, is there a chance a regular reaches out? There is. But I've sort of thought hard about this. I'm pretty sure if they do, they're going to say like, hey, here's like either a thing we want your advice on, or like, here's some feedback for you. We're thinking about how we interpret this, you know, provision with respect to you. And they're like, oh, thanks for alerting us. Let's have a conversation here about like what, you know, what you feel comfortable with, what you don't. And like, you know, if instead if the first conversation you have is like extremely harsh, and they're just like, all right, we're filing tomorrow. Like something went wrong a long time ago.
Yeah, it makes sense. I love that. I love that. I've never heard that quote that, stay up late at night rather than losing sleep. It makes so much sense.
Yeah.
Basically, just get ahead of it, be prepared for anything, and then you're ready to pivot. Yeah.
And you can't prepare for everything in the world, but there are some sets of things that you want to at least be prepared to be prepared for, and at least know how prepared you are, and make sure that you're prepared enough that if things change and you need to deal with it more, you're going to be able, make sure you can get, make sure that you don't all of a sudden wake up and you're fucked and there's no way you can get out of it.
Yeah. So interesting. So I have to ask you, because everybody asked me to ask you, the Biden donation.
Yeah.
What was the motivation behind that?
Yeah. So there's, I sort of, I'm a little hesitant to talk about politics proper in some senses.
You
and
do
I think
not
the
have
reason,
to talk about politics for sure.
Obviously with friends I do, but to some extent, as I think it's important that my business is not political, and that's that side of me is not the same side of me as a business, but one thing that I think I will say, and that I think is kind of really interesting and powerful and surprising, is what's the scale of money in politics? How much money matters? And I think there's a really big input to questions like this, right? There's are you just flushing money? Is there any point in ever donating in politics?
Right.
And I think a lot of people are obviously no, there's so much money, so much lobbying. It's that's just a waste. There's no chance you're going to have any impact, no chance you're going to change anything, change anyone's mind, anything like that. And I think it's sort of a lazy answer. I think it's really worth putting yourself through the thought experiment and doing the math. And the math's weird. So how much money is spent? Well, let's go back 4 years when it's even weirder. How much money was spent on the 2016 presidential election per candidate?
I don't know the actual number, but
what's your guess?
A few $100 million, pushing $1 billion, I would imagine. About $1 billion.
Billion was about the answer.
Yeah, billion. Yeah.
It's the right ballpark. Per candidate. Is that a lot or a little? I don't know. What's the way to ballpark it? How much does the president matter? I don't know what that means. I don't even know if I'm talking there about how's it much matter, who they are, how much does it matter, what happens with them, what they choose, but just
and how much does it matter that it's them or the other person? Not even how much does that individual matter, but what's the relative difference between the two of them? There's
a lot of things this is missing, but let's even just ignore that for now and just say let's get a ballpark here, right? To see where we're coming from. And what's one way to ballpark the importance of the office of the presidency in some sort of abstract sense? I don't know. I mean, this is not a great way to do it, but it gets you the right something. It's what's the federal budget? And I don't know, president has 20% impact on the federal budget.
Right.
Also, they do a lot that's not the federal budget. So maybe you think it's the size of the federal budget is kind of order of magnitude.
Sure.
The importance of the office of presidency, whatever. Just trying to get orders of magnitude here. What's the federal budget nowadays? It's $5 trillion.
Yeah.
So
not diminishing anytime soon.
That's right. It's certainly only going one way there. And it's 4 years. That's $20 trillion per term. And now you're sort of all right. So the order of magnitude of the importance of the office is 20 trillion. The order of magnitude of the amount of money spent total, let's say in the general election, between the two major party candidates, 2 billion. Yeah. And now 2 billion, 20 trillion, it's a factor of 10,000 different. It's sort of is that a lot to spend? Or is that not?
It's nothing. It's nothing when you think of it in relative terms.
Yeah, it's just fucking nothing. And so now all of a sudden you're wait, you're telling me that there's $1 billion influencing $10 trillion. And it's sort of what gives? And yeah, that's just the answer, I think. What gives? There's no gotcha. And you're sort of okay, well, Warren Buffett, how is he's got more, how is he not finding something to do with money here, right? with like a lot of money, like $1 billion. I just don't know. I don't think there's a good answer to that. It's just a mistake. I mean,
which makes like Bloomberg's like run so interesting. You know,
it makes it so interesting. It puts in a really new light, and you're sort of like, oh wait, actually, it makes a lot of sense.
Yeah.
You know,
talk about leverage,
right? And then you think about like how much did he spend in the
leverage?
Exactly.
$100 billion.
You know, how much did he spend in the general election? I think it's like $100 million or something, right?
Yeah.
And you're like, oh, yeah, that's a real amount. That's like all of a sudden the sort of amount you might expect a really rich person to spend on an election, given the sort of like trillions of dollars at stake, you know?
Yeah.
And you're still like, well, how about everyone else?
Yeah. It sounds like you did a casual $5 million experiment.
Yeah. I mean, that's, and it's sort of like my response is like, this is so fucking embarrassing for the rest of the world. How was I number 2? Like, what the fuck? I should not be number, I should be number like, 1,000. Like, where's everyone else?
You didn't know you were number 2 when you gave when you gave the donation. Right, it was just the amount that you wanted to give. It wasn't relative to anybody else's.
That's right. And then it's sort of like, geez, like you're telling me that like, there's like, thousands of people with massively more than me who like couldn't think of anything that they thought would be relevant here. Like with the money, they're never going to find anything to do with. And I think just think the answer is like, I don't know. There's this cool post on Slate Codex, which is just a riff on this, which points out that the amount of money that Americans spend on politics is less than the amount that they spend on almonds. And it sort of just gets at like, okay, like when you really put it in perspective, like which should we be devoting more of our budgets to, like political campaigning or almonds? And it's sort of like, yeah, I don't know. I don't think it's almonds.
$5 million buy a lot of almonds.
I know, right? I should do that next year. It's just like people get to the office one day and it's just like you're just swimming through almonds.
the Scrooge McDuck, like in his gold vault of almonds. I mean, I know we're up against it here, so I'm going to go ahead and call it. We could talk, I feel like, for 3 or 4 hours. This is so incredibly interesting to me. And it's funny, just to finalize that point, I mean, you can see why you're such a good trader. And the reason that other people aren't giving more money is because they don't have a trading or quant background like you do, and they've never done the mental gymnastics to that point, which seems very obvious when I hear you articulate it, but not something I would have ever thought of. And
I mean, it seemed like ridiculous to me until I did the math, and it's like, holy shit, is that how the math works out? And I just like spent like 20 hours like going over and like, am I missing something here? I just came away feeling like, no, I'm not. It's just how it works.
Next time I'm looking for your $1 billion donation, then really up the, I don't know who it'll be backing.
Well, but, I certainly hope that they take FTT. That's all I can say.
I was going to say, I hope so too. In your case, and because I supported the same guy. So no problems there. So where can everybody keep up with you and follow you after this?
Yeah, I mean, I spend way too much of my life on Twitter. So that's, SBF Alameda on Twitter. Yeah. That's sort of the answer. But FTX.com will be a decent place to go as well. So
awesome, man. Well, once again, thank you so much. I'm really glad. Like, I think we touched on a lot of things that you haven't spoken about so thoroughly in other podcasts. I'm glad we got to have that different conversation. And for me, as a trader, I just really found it incredibly interesting and eye-opening.
I had a lot of fun.
Awesome. Well, thank you so much. And since I have like 4 more hours of questions, we can do this again, hopefully down the road another time.
Sounds good.
Thank you very much.
All right. Thank you.
Let's go.